What's up, guys? I hope you're having a fantastic start to your week. So, it's the last week of September. It's the start of fall. We're in the last trading quarter. So, what I like to do towards the later part of the year is to jump on those monthly charts and to really kind of start to formulate a bias for the next trading year. I mean, because as a swing trader, I need to have a bias one direction over the other, really. There are ways to capitalize on those ebbs and flows of the markets as prices ebbing and flowing, moving up and down. But as a whole, you want to have that unidirectional bias, okay? So are we trending up? Are we trending down? What's going on those larger time frames? Because as a whole, those are going to dictate where the market's going to go, if it's going to go up, if it's going to go down. That's what's going to dictate the market movements over the next 12 to 18 months. Okay, and as a swing trader that holds positions from anywhere from 4 to 6 months, that's what I'm interested in. Okay, I do have those smaller swing trades where maybe 1 to 3 week movements I'm catching. So I like to plan for those as well. Those are usually the snacks, but the full course meals are those 1,000 pip trades that you can catch with patience, okay, and discipline. I'm going to link a couple of the ones that I've caught over the past 2 years, and let's get into it. Surprise, surprise, those 1,000 pip trades have come in on the pound yen. And surprise, surprise, I feel like something may be coming on the pound yen here in the next near future, okay? Now, disclaimer-wise, this isn't, set in stone, okay? This is one side of the market. This is one viewpoint. There's definitely other interpretations of what the market's doing currently on the pound yen. But over the past couple weeks, my bias has slowly shifted, and as I've gotten back onto those monthly charts, it's becoming clear and evident what's potentially happening. And I'm going to go into that tonight for you. So sit tight, get some popcorn, drink a beer. I actually have my Guinness right here. I'm a Guinness guy. I don't drink much, but I have the occasional sip. So let's get into the pound yen chart here. So we are on the monthly chart, okay? Like I said, as we get into the end of the month, into the end of the year, I like to really kind of get that overall picture of what in the hell is the market doing, okay? Because these things can be confusing as hell sometimes, okay? So let's get into it. Obviously high, low, and then kind of intra points, all right? One key thing that I want you to pay attention to here on the monthly chart are some of those more obvious zones, those points that in the market that just bam jump out at you, okay? Obviously our high point, obviously our low points are going to be those main points, okay? Then we have some internal points here which the market is essentially trading at currently, okay? We're going to get into those here in a few minutes, but first, if you don't learn anything else from me, I want you to learn that wicks are orders, okay? The market typically goes to where those wicks are because those are essentially for lack of a better way of looking at them, those supply and demand points in the market, okay? There are those turning points typically where you get those long extended wicks, okay? And wherever you see large wicks, you typically see large moves. Now, again, we're on the monthly chart here. So, this long wick down here, that accounted for, from bottom to top, over 4,000 pips over the course of the year. Okay, that was 2009 into 2010. All right. Again, large wicks on top created a down move of, again, over 4,000 pips. Okay, you get these wicks on bottom, super big bullish move up over almost 8,000 pips over the course of over 1,000 days. Okay, so wicks are orders. All right, that's what I want you to keep in mind tonight. Okay, now let's start identifying some of these wicky zones, is what I like to call them. Some of these order zones, these supply, these demand zones. All right, again, big, huge order wicks in here. Now I'm going to draw this one a little bit different here because I also see this wick here, so I don't want to ignore that. Also over here. All right, we'll just drag it all the way through. Okay, essentially this whole zone here, lot of orders. All right, now this push down here was fundamentally driven by essentially the U.S. stock market crash. That's our 2008 stock market crash. Now, as we are getting over into more recent price action, let's focus in on what's going on here. Huge wick here that you can see price has essentially kind of seems like it's bottomed out here. Okay, we got this huge stock market crash, slight correction, push back down, which wasn't as impulsive as the initial push down from this zone. And then we pushed up, broke that zone, and then again you can see another. This was Brexit. Now this is another fundamentally driven economic thing going on in the world, going on in the pound pairs. Okay, so pay attention to those. I mean, unusually large moves that are stimulated, that are stimulating those huge impulsive moves. Okay, pay attention to the reaction out of this zone down here. We pop pretty powerfully coming out. Okay, and each time we try to push lower, we can't do it. Bulls step in each time, pushing price higher. So what's happened most recently? All right, let's look for some more zones. Why is this happening in and around here? Why isn't price being able to push back down? Well, again, wicks are orders. Where are we at with relation to those true orders in the market? Okay, you can see a strong zone similar to this one just above it. Okay, and we are essentially, we retested that recently. Okay, now to say market's going to push up, we haven't built enough case for that yet. All right, we have to start building that case. Now let's look at what's been going on. Okay, price pushes down, bottoms out, finds a bottom. Now I'm going to start labeling some points here that I want you to pay attention to. Obviously, we have our point 1. Just bear with me as I get all set up here. We got point 2, and I'll relabel those here in just a second. Wow, what happened there? I see. Can't copy and paste like that. You got to duplicate it on. Okay. These first 3 points here. Let's rename this one to point 2. Now, I have shared this analysis with some students, and was some confusion about are these Elliott wave things or whatnot. I don't know what Elliott wave is. So no, not related to Elliott wave at all. I don't even know the theories behind that. I never learned that. I don't intend to learn it, but it works for some people. Okay, so first things first, let's look at 1, 2, and 3. All right. Whoa. So we have our. We'll just delete that. We know that's a powerful zone down there. We bottomed out in that zone and pushed up. Okay. We pushed through this zone. Now this big large candle was the U.S. presidential election when Donald Trump got elected. Okay. That's what stimulated this large move. Now this number 2 here is Brexit. Number 1, I'm not sure, maybe something, but number 2 was the Brexit announcement in 2016. Okay. Now, number 3 here, pushing up, is the U.S. presidential election. Okay. Now, we are kind of chopping around here because we are starting to have some more Brexit news. All right. Now, before we get ahead of ourselves, let's start just filling in the blanks here. All right. Strong impulsive move, top to bottom. All right. Now we get a bounce. Okay. Let's start mapping the market, what I call mapping the market. Let's identify what's going on. Identifying this low point, we have a low point, and then we have a high, and then we push back, retrace, and then we push up to a new high. Okay, so anybody who knows how to identify an uptrend, we got that 1, 2, 3, 4 punch. Okay, point 1, point 2, point 3, point 4. Okay, that's by definition potentially starting an uptrend. Look at what's happening most recently. Okay, if we define this as a potential uptrend, we have a low, we have a high, we have a outside return, or whatever you want to call it, a retracement. Can't call it a high or low yet because we haven't taken out this point here. Now, these are key pivotal points in the market that there's a lot of interest in and around. Okay, so we have a low, we have a high, we have a higher low, not a higher low yet, sorry, until we get this big push, break and close below, break and close above this previous high. Now we can label this our higher low and up to our higher high. So what is all this potentially forming? If you guessed a new potential higher low, you are on the same page as I am. Okay, so just because we have been on a rip-roaring downtrend and I was able to catch 1,000 pips essentially from 152.45.3, which I'll never forget that, essentially there down to 1,030 pips is what I caught on this move here. This whole move could have just been potentially just a retracement on the monthly chart. And if that's the case, where do you think market's likely to go next? We've identified what the market's doing. If we are in our predictive phase, we've identified we are potentially in an uptrend. If we're just using this price pattern here, okay, this here, we've identified low, high, higher low, higher high, potentially higher low. Okay, so if we are in our predictive stage of trade planning, we are predicting an uptrend to at least at a minimum retest the highs, right? And potentially go on to trend continuation. Okay, so when we start to figure out how we can get involved in these trades, let's delve down a little bit deeper and actually figure out, does this make sense? Okay, how are we going to make new highs if our analysis is correct? Okay, now again, I'm not saying the market's going to rip up. All right, what I am saying is based off of what I've analyzed, I could potentially see a new impulsive move to the upside, and we're going to see exactly what's going on to cause that. All right, now when we delve a little bit deeper into the technical analysis side of this, okay, so we've just simply identified a trend. We are identifying a potential uptrend. Okay, well, what stimulated this reaction here to create this large wick? Okay, that's another thing I want to touch base with is wicks or just candlesticks in general. Now, I don't trade candlestick patterns specifically, but what I do pay attention to is the anatomy of them. Okay, essentially the anatomy of the candlestick pattern. Now, I want you to pay attention to the difference between the impulsive nature of the bullish candles in this whole process and the bearish candles. Okay, so we've got a huge bullish candle. Okay, these are pretty decently sized bullish candles. And then we reach our top, huge, strong bearish candle, engulfs several other monthly candles, closes on its bottoms, pushes down on the very next candle, and then retraces, finds that lower high, and then pushes down. Okay, but what about this bearish candle is different about this? Yeah, we don't really have a high wick to the upside, indicating strong selling pressure at the opening, but as we pushed down, we had a wick. Okay, yeah, we closed, we took out this low, but barely. And then same type of thing, scenario happened again. We retraced, and then boom, pushed down, opened up here on this monthly candle, strong, not as initially strong selling pressure, but we eventually came in strong, pushed down very far, made new lows. But what happened? To me, this candle looks exhaustive in nature. Okay, it looks like it's reaching for something. It looks like it is running out of steam. And obviously, as we can see from this monthly candle, it opened up a little bit of selling pressure, but then boom, we've taken out the highs. We've actually taken out the highs of the previous monthly candle. Okay, so I want you to pay attention to situations like this. Okay, this is all I'm doing. I'm telling myself a story with these types of candles formations. Okay, now I don't know the specific names of these candle formations, but it's just something to pay attention to. Okay, this candle is pretty similar to this candle here, and look at this next monthly candle. Now keep in mind that this monthly candle still has a week left of price action, so this week is going to essentially, I believe, formulate the rest of the year and potentially into next year, okay, depending on what happens in the next couple weeks. All right, now let's move forward. Why did this wick look like it was reaching for something, and why was it exhaustive in nature? Okay, and you can see that by the clear, you know, if you just see, that's almost a 400 pip wick on the bottom. Okay, the body itself was just shy of 300 pips. Okay, so the wick is much bigger, or 100 pips bigger than the body itself. Okay, why did that happen? What caused that in and around here? Well, if you remember, what did I say about wicks in general? Wicks are orders, all right? And if you zoom back out, where did that wick come in? What did it hit? Look at all these wicks in this zone, okay? We got a huge wick here. We got wicks here that stimulated a huge bullish move. We got all these wicks to the downside, okay? Now also remember, in a healthy uptrend, our high or low will not be violated. And this is essentially our line in the sand for the pound yen on whether or not this market's going to go much lower or much higher. As it stands right now, we've reached for some specific levels we will look at right now. Okay, if we are just looking at this here, and if we just take sore thumb low to sore thumb high, we tag the 50%. Now, if we again map the market here, we have our swing point here. This ended up being our higher low once we pushed up and formulated this higher high, which broke this high. So if we take that Fibonacci and go from low to high, look what we tagged. All right, let's remove this zone. We already know that's a hot and heavy price zone full of orders. All right, let's clean it up a little bit. So this is the overall, and that tag the 50%. We'll leave those on there because those are going to come into play later on. Okay, and then this we tagged the 78.6 fib retracement pretty perfectly. Okay, can you see how it's starting to look sexy to me? So essentially what this is potentially telling me is this is still technically an uptrend, and all this here, all this mumbo jumbo stuff here, let me bring up my little tool wherever it is. Whoa, that's from something mentorship, right? All right, so all this is essentially a liquidity or an exhaustion phase for our uptrend. Okay, okay, now again, how do we take advantage of this? Because we already missed this. That's 700 pips away. We already missed that entry. How do we take advantage of this? That's what we're going to look at now. And that's how we're going to dive down a little bit onto the lower time frames. Let's just jump down a time frame to the weekly chart. Closed kind of iffy last week. All right. Now, we punched. So again, if we are mapping the market from the downside, we have a high, low, pushed in, made that. Okay, so this is interesting too. Now, it just really depends on your definition of what a lower low, lower close is. So most people define a downtrend or a break of structure as a breach and close below our previous low. Well, we punched for 3 weeks straight to try and punch below this 144 level or 145 level, but couldn't do it until our last push down. Okay, so technically we didn't really get that lower low, lower close candle until here. Now we've since bounced, reached for those big higher time frame levels and pushed up again. Okay, so as a whole, this, if you're on the weekly chart, this is our essentially line in the sand. So price can theoretically come anywhere in between here and still be classified as a downtrend. Now let's flip down to the daily chart and look at something interesting. Okay. Going back to that line here, we did get a lower low, lower close on the daily chart, and you can see that unfolded nicely and gave you another push down. Okay, so this is what I want you to pay attention to. Listen to me very clearly here. When you are doing your analysis, you're mapping the market, whatever you're trying to formulate for yourself as a consistent plan, you have to be very consistent with your rules and the way you approach the market, because just having the knowledge isn't enough. You have to have the skills to apply that knowledge, and the skills is essentially like your trading plan that you develop for yourself with specific clear-cut rules. What defines an uptrend, what defines a downtrend, what defines my methodology to approaching the market. Okay, because I know millions of guys, not millions, I know hundreds of guys that use, technical analysis, okay, but they're not consistent. Yet there's some people who use technical analysis who are very consistent and very profitable. Why is that? Where's the hang up? They have all the knowledge, but what's the hang up? They don't have the skills. They don't have the plan. Okay, because just using Fibonacci, trend lines, structure, supply and demand, all that stuff doesn't mean jack if you don't know how to apply it. That's what I want you to pay attention to. And that's why it's important to define how you're going to use that. Okay, not just using it whenever things look good. Okay, you have to have a systematic, methodical, clear-cut, black and white, no gray area, how you're going to apply it. Okay, and with that comes rules. Okay, so let's get into this analysis again. Okay, so on the daily chart, our line in the sand for this downtrend, because remember, on the weekly chart, we never got a close down here. So on the weekly chart, if you're using the chart as an analysis, this was essentially your low, and this up here is essentially your high. Whereas on the daily chart, if you're strictly analyzing and mapping the market on the daily chart, this was your line in the sand, which was taken out. So our pullback and our line in the sand then becomes this point. How do you tell which one's which? Okay, doesn't really matter. All that matters is, like I said before, you consistently use the same time frame to analyze and make your decisions. Okay, which time frame or which analysis time frame am I going to use to make those definitions? Okay, what defines an uptrend, what defines a downtrend, and what analysis time frame am I going to use? Okay, like I said, it doesn't matter which time frame you use as long as you're consistent. Okay, so what happened on Friday? We punched. If we're using the daily time frame, our line in the sand. We punched through it. We probed it. not being dirty or anything. We just punched through it. Buyers were probing the market above it. Maybe they were taking stops. Maybe this was manipulation. Maybe this was a first indication of the market wanting to go higher. Okay? Because look, we've already taken off some, pretty interesting levels here. Okay, we took out here. We punched this. And we punched up into this one, but didn't quite reach that yet. Okay? So, let's continue on in the analysis. Sorry if I'm losing you. I hope you're staying on track. Let's clear off some of these here and start looking at some more technical analysis. What about trend lines? Do you use trend lines in your trading? I know some people who really don't like trend lines because they're very subjective. Personally, I use them, and I basically have a trend line in all my trades. Going back to people who don't like them, I know people and I help people specifically develop a trading plan or routine around EMAs. They use essentially EMAs as like a dynamic trend line. Okay, and if you were to put an EMA on here, you may get one kind of sloping up, crossing through price action, crossing through it or whatever, and that's kind of like their EMA formation. To help identify a trend instead of a static line in time. Okay, and again, going back to the last video that I did over the Aussie dollar, which if you took that trade, you're up anywhere between 1 and 200 pips at the moment. I took partial profits right around 200 pips on that, so I'm just kind of chilling on that for right now, and we're going to see what happens with that. But let's get back into this. We're coming up on 30 minutes, and I get long-winded here. So let's look at some trend lines, okay? Because I use, like I said, trend line in all kinds of my trades. Essentially every trade I have. What happened on Friday? And again, I use trend lines essentially as a zone. So if we're looking at this as like a zone, where are we at? Where are we sitting at right now? We broke this trend line, and now we're retesting it. Now, I'm not saying that the price broke this, it's retesting and it's going to move higher. Not saying that at all. I have no idea what price is going to do from here. This is a big, strong candle here, okay? We pushed up higher than this previous days, but that totally sucker punched people who tried to buy this on this momentum candle and sold off heavily, engulfed the previous 2 days, it looks like. So we may simply just be making a quick little pullback before a dump. But you have to keep in mind the overall picture that we just formulated on the monthly chart. Okay, this to me is a first step that was initiated on going higher. Now, if this down here is our new higher low, because remember, we can't call that a higher low until technically our highs are taken out, if we're using the monthly chart as our analysis time frame. So the market is free to come all the way down here in this area here and put in a potential higher low than this low, okay, which would maybe put in a series of, so in fact, if we are just looking at the daily chart here, we remember at the very beginning I said that 1, 2, 3, 4 punch is important to identify a potential trend reversal. Okay, now it's kind of sketchy or iffy on whether or not we've actually taken out some of these previous key levels. It just depends on the time frame that you're analyzing. On the 4-hour chart, we actually broke and closed above this, which if you're using the 4-hour chart as your definition of how you're going to define an uptrend, a break and close above, in my definition, is something that would warrant me to look for a pullback and jump on that trend. Whereas on the daily chart, we punched it but didn't close above it. Whereas on the weekly chart, we're far from punching through it again. I mean, because we got quickly sold off. All right. So again, make that definition for yourself, plan it, and trade it appropriately. Okay. So if we are defining this as a potential trend reversal, we're free to come all the way back where? Essentially all the way back down into our previous low point here before we punch higher. Whether we're going to punch higher, no idea. Don't have any clue whatsoever. Okay, all I can do is trade what I'm seeing and base my trading decisions off of my analysis. Okay. For all I know, this big bearish candle could have just been a pullback to some previous structure levels. Got our first one here, second little interesting one here, and throw in some Fibonacci. If you use advanced fibs, we're starting to trend here on the daily chart. Pull back to that 61.8 fib, kind of punched below it, but we're essentially back on it. The other areas here are there. Okay, if you want to do a more traditional Fibonacci approach, we got our low to high there. We tag the 38.2. In a heavy trending market, sometimes that holds. All right, if you want to do sore thumb low to sore thumb high and bring in maybe a 23.6. I don't know if we touched that or not. We've closed below it. So who knows if that's going to hold or not. I don't really ever use that. I very rarely use the 38.2. All right. So it stands to see the pound yen has some, it's at a decision point, essentially, is what I'm saying. All right. We've pushed down significantly over the past several months. We did a 1, 2, 3 punch, kind of almost a measured move. And then we've broken higher. We've broken our trend line. We've closed above it on the daily time frame, depending on how you draw it. Maybe we're breaking, retesting for a next move higher. If this is not our high, or if this is not just simply a pullback to get better prices for a push-up, how are we going to plan this trade? Okay, what's formulating on maybe the weekly chart? Jump back out. Let's just clear all this mess off and just put in the basic overall picture that I see on the pound yen. We got our lows, low points. Now that we've put in this point here and have had a substantial bullish move off of it, I'm calling that, using this as an initiation point, and using this as an establishment point. Okay. Some higher time frame. I forgot to put this on earlier, but if we take our weekly chart and just connect this, use this as our establishment point and this point as our initiation point, look what happened. We broke that. Okay. Whether it's going to hold, I have no idea. But if this isn't the pullback that we're expecting to hold, where is that going to be? So like I said, if you're looking at the weekly chart or monthly chart, whatever, if you're calling this this point here our higher low, and this point here our potential new higher low in the grand scheme of things, price could potentially pull all the way back into here and push up. Maybe we retest this trend line here and push up. Okay, fib wise, if we're looking at some fibs, now what we're doing is we're planning our trade. High to low or low to high. Where's our fibs lining up? Where's our wicks? Wicks mean orders. Okay, if you're some type of pattern trader, what is this looking like? I don't trade these, but maybe something like this. got our little neckline here, crown pattern or head and shoulders, whatever you want to call it, inverse head and shoulders. Draw that in a little bit better. Wow, we are just bombing on this. This is like my longest video. But this is the process that I go through every single week, every single month, every single year to find trades. Okay, so this is a nice place. That would also kind of coincide with a trendline retest, kind of, depending on where it comes in at. Maybe price just slowly drifts down and then we get a spike down in around here or in here. That's going to come in nicely at some nice confluence, just strictly based off of structure, where the wicks are or where the orders are. Some Fibonacci levels based off of our most recent little impulsive move here. And then some higher time frame levels. Okay, that's not a bad place to look for long entries. If that's the case, if this is our true high right now and this is our true low, you know, this is what the fibs would look like. And then these would be our first profit targets. This one lines up pretty nicely with our overall most recent highs in and around 156. Okay, if price broke, is wanting to retest, and we're using our advanced fibs by measuring kind of volume influxes, we got our high to high, we're pulled back into a pretty attractive zone right now, essentially on Friday with this big dump. Pulled into the 61.8. We got this nice little zone here, which had a huge sell-off previously. Look at the reaction. The other thing I want you to pay attention to is how do you quantify points in the market? Okay, how do you gauge strength in buying, strength in selling? Look at the reaction here, right here, and right here. Same price points in the market, same zones. Kind of see what time of day it is. It's kind of hard to tell on a daily time frame, but August 1st versus September 14th. Not sure what days those are. August 1st was a Wednesday and September 14th was a Friday. Okay, if we look in there at specific time periods, you know, the true kind of sell-off started at maybe 9 a.m. That happened, you know, not quite 9 a.m. That's more or less irrelevant. But what I want you to pay attention to is what happened when price got back there. Something happened here which stimulated a huge sell-off. Well, what happened when price got back there again? Was there selling interest? A little bit. But instead of dropping 700 pips like it did last time, what happened before we broke it? We dropped 75 pips. So does that tell you that there's interest in selling here as opposed to maybe buying? And what happened when it broke and retested? Well, we pushed up almost 300 pips. That's what I mean by quantifying movements in the market. By looking at that quantification, if that's even a word. I don't even know if that's a word, but being aware of price levels or zones or whatever you want to call them and how price is reacting to them in the future when price comes back there. Same little area happened here. Same little thing happened here. Something happened here which stimulated a huge drop-off. There was that imbalance between supply and demand, buyers and sellers, which stimulated, once price consolidated here, stimulated, again, 500-600 pip drop. Whereas here, same area, I mean, same prices, whatever, only 300 pip drop, maybe. Less selling interest here than there was here. Less selling interest here than there was here. Okay? That's what I want you to pay attention to. I'm not saying that price is going to explode from here. It's just an observation. Okay. Where would price potentially be going if this whole idea, this general idea of this being a higher low, disregarding the fact where our entry would be, where would price potentially be going? And to find out that, let's jump back out to the monthly chart. Sorry, this is so long. This is such a long video. But it is what it is. If you don't like it, don't watch it. Okay? Main monthly chart trend line, overall high to this high here. Calling this an initiation point or an establishment point, initiation point, vice versa. Initiation point, establishment point. Okay? Projecting that off in the future, we have yet to retest that a third time. Taking this as an initiation point and maybe this point as an establishment point. We already saw in like the weekly chart, daily chart, we've already closed above this. The monthly chart is yet to be seen. Okay? We're simply doing trend analysis here. Now that we've had a substantial bullish move off of this low point here, I'm using this as an initiation point and this as an establishment point. Okay? You can see a potential channel formation forming. And again, pulling in those fibs that we used earlier, looking at our profit targets to the upside, we used two fibs which were tested pretty perfectly. In this case, the 50, and in this case, the 78.6. So those profit targets come in where? At the beginning, I said 0.2, which is where Brexit is. What's sitting there? Wicks. Surprise, surprise. Okay. Just kind of tighten it up a little bit. Maybe something like that. Who knows? It's just a zone. Now let's look for some other confluence. If we are calling this our potential 1, 2, 3, looking for that fourth push up, that might formulate some type of ABCD pattern or some type of measured move. Okay, so there's two ways that I kind of identify a termination point for an ABCD pattern. Take some type of measured move. That's actually going to put us well above, up around 170, which again, wicks, lots of wicks up there. No surprise. There's a termination point up there around 170. And if you take the fib projection of this, calling this the A, B, C, D, projecting that B to C move up, that termination spot comes in essentially right here. Oops. Alright, so just to start clearing this up a little bit because it gets a little fib jumpy or heavy. ABCD completion point. Somewhere up around there, essentially. We'll call that, we'll do that blue. Okay? So what I'm saying is my zone is, or my ABCD pattern is essentially going to complete somewhere in there. We'll just delete that for visualization purposes. Okay? So there's a nice confluence, nice magnets, if you want to call them that. We have our main downtrend line. We have our profit targets, essentially up in this area. That didn't work out. Profit targets up in that area. Have an ABCD pattern. Well, if we fib this point here, Are these fibs being respected? This was our first point that I initiated, or our point 1 at the beginning of the video, point 2, point 3. Calling this our initiation move, or our impulsive move. Look what it topped out at there, the 50%, perfectly. Couldn't have been more perfect. Before we dump down, it's respected that 50% perfectly. Okay, that's 61.8 fib retracement of our initial impulsive move down. Literally sits on the profit target of this thing there. I'd say these fibs are being respected to a certain degree. Okay, within, I mean, we're on a monthly chart and they're being respected to pips, not hundreds of pips or, you know, dozens of pips, but literally single pips. So they're being identified, they're being respected. So if price gets up there, that may be a magnet. Okay, that may be a turning point up there. This could be an impulsive move down. This could be a liquidation phase for a next impulsive move down. Then these profit targets down here would be fair game. Okay, maybe this is our 1, 2, 3, 4 punch. Okay, we're coming up on an hour here, guys, 50 minutes almost. I hate to just blab on. I could talk about this all night long, but this is my life. I mean, almost. This is my profession. This is what I do. Okay, this is how I approach the market day in and day out. Okay, but you can't do this without a plan. Okay, because just as easily as I made a case for a bullish move, I can delete this and say, look what the market's doing. We've topped out here like this, you know, calling this a little secondary point. Look at this. We've broken this trend line here. We've broken that trend line. Taken our fibs, impulsive move, tested the 50% perfectly. Man, we are going to dump down to 108. Can you see where the analysis paralysis comes in? This is what drives traders absolutely mad. And this is what drove me absolutely nuts, and not being able to apply the knowledge I had appropriately and effectively to being able to capitalize on movements. It does not matter if this thing goes bullish or bearish, okay? This plan some days will work. The other plan that I just formulated over the past 45 minutes will work sometimes. It doesn't matter which one wins. What matters is you consistently approach the market in a systematic way that will systematically give you probabilities over time. That's what matters. Doesn't matter who's right or who's wrong. I'm going to be wrong sometimes. I'm going to be right sometimes. And vice versa for you. Doesn't matter how you approach the market. Your system literally accounts for roughly 10% of your overall success. Okay? Do you think it's really that important on how you trade, and whether you trade with EMAs, whether you trade with any type of indicators, whether you just trade support and resistance? It does not matter how you trade. There's people trading with every known system known to man, using the freaking moon and planets. Doesn't matter. What matters is that you systematically use that the same way over and over and over again. That's what matters. So, big moves coming one way or another on the pound yen. Big decisions to be made. Like I said, bearish. We've broken this. Got this kind of situation forming. Maybe we just retested this trend line here before it dumps. Okay? Who knows? Maybe this setup is forming. Wow, that's even more ridiculous. Maybe this here is setting up. because we're on the monthly chart. That's why. Okay. Maybe we are nearing a break of this trend line here, and we're going to move up. I don't know. I have no idea. Okay. What I do know is that I plan the same way every time. Identify the market structure, what the market's doing, what its least path of least resistance is based off of my analysis time frame, and I trade it. Okay. If you don't learn anything else from me, take your knowledge that you know and make a system and a skill set approach to using that knowledge. Okay. Take care, guys. I hope this helped. Sorry it got so long. If you like these longer videos, let me know. I can try and shorten them up, but I get long-winded. Okay. But I don't mind. I'm passionate about this. But take care.